Okay, so today we are going to talk about one of the most important concepts in trading in general, and that is market structure. The reason why I think that market structure is one of the most important concepts is because market structure is basically order flow. Market structure is basically following the trend. Market structure is going to tell you how to form your daily bias. Market structure is going to tell you so much that you need to know from trading and from the direction of the market. And so I'm going to show you how you already understand market structure, and a baby already understands the market structure by the simplest drawing that we've ever done. Right? So one of the things that I always said is that it's always been in front of us. And it's so weird. Like, I had no idea that this was going to be the case, but once I became profitable, I was like, oh my God, this was in front of me all the time. So let me ask you, draw me an uptrend. Right now, I'm telling you, draw me an uptrend. What you are going to do is you're going to draw something like this, right? And if I tell you to draw me a downtrend, you're going to draw something like this. So why do a lot of people, when they're waiting for a way to execute in the markets, they're waiting for something like this? Like, imagine people are always waiting for all of the highs and lows to get swept, not understanding that on a bullish trend, the market is not supposed to go for the lows. It's supposed to continue on a bullish trend. And so a lot of people, they get stuck in the waiting phase because they don't know what they're waiting for. They think there's equal lows, and that's why they have to be swept. There's equal highs, that's why they have to be swept. And this video is to tell you the exact opposite. We'll see that on an uptrend, you can see you never have these lows getting swept, right? Yes, there might be in the real market, there might be a sweep of the low, but usually the market just continues higher. And I will tell you exactly what it means to give us a market shift. We'll talk about market shifts completely in a whole new video. But what is important for us to understand is that it's always been in front of us. And market structure has two possibilities. We either have bullish market structure or we have bearish market structure. And both are drawn right here. Let's start off with the bullish market structure. Well, what are the things that we can see? Well, on bullish market structure, the highs always get targeted, right? The market is always looking for a bullish PD array when it's retracing to then move up and trade towards these highs and a little bit higher. Then we have the pullback. We wait for the market to move up, and there you go. We are going to target these highs. So this already tells you so much about how we are going to execute in the market, when we are going to wait, when we are not going to wait. A simple drawing that you've always seen has told you already so much, but you did not know, which is normal, right? Now, one of the things that is important to also understand, and we'll talk about it, is that market structure is both internal and external. Because let's say that this is the daily time frame. That does not mean that on the 4-hour time frame, we might not have bearish market structure, right? Because the market is going to start forming some bearish order flow. But eventually, once that switches, you ask yourself, okay, what is the market structure on the daily? Well, it's bullish. What is the market structure on the 4-hour? Well, right here, it's bullish. What is the market structure on the 1-hour? Well, right here, it's going to be bullish. So that's when you start stacking things on top of each other. But let's first talk about simple market structure. Afterwards, in another lesson, we will talk about order flow and we'll talk about the complexity of market structure. But this is supposed to be a more simple video to break down the simple basics, this foundation of market structure. So when we're looking at bullish market structure, we want to see bullish PD arrays getting respected. We want to see bearish PD arrays getting disrespected. And we don't want the lows to be swept and the highs are going to be targeted. These are the most important things that you need to understand about a bullish trend, right? So a lot of people, what you have to understand is that when the market is pulling back, is just pulling back towards where? It's pulling back towards a higher time frame PD array right here. Right? And then the market starts moving to the upside. So you can see that the bullish structure is this move to the upside, followed by the move to the downside, which this is going to be internal structure. We'll talk about it. And then once we hit the higher time frame PD array, and you also have a fair value gap down there. Let me quickly show you the fair value gap also. Right here, which is exactly what was tapped. And then we move to the upside. So as soon as you see this confirmation, this tells you that the highs now are going to get targeted, right? And then next day, the highs are targeted. This is already telling you so much about, for example, daily bias. Because you're not really trying to call this low. You can, but you're not really trying to call this low because you could have said this fair value gap. You could have said it's this order block. You could have said it's this order block. But no, the market reacted out of this fair value gap. So it's important for us to understand that the market moves bullish. Then after we sweep the high, what happens? A bullish PD array is going to get respected. And so in that case, what is it here? So if we look back through price, what can we see? Right here, bullish fair value gap. And all of this down move becomes an order block. All of this down move becomes the higher low. So we have a low. So this is the low. This is a higher low. So we don't want this to be breached. So all of this move lower is going to act as an order block. And then it's going to give you a PD array to go off of, which is going to be this whole fair value gap that then reacts to the upside. So then we have a new higher low. The market sweeps this high, right? Now we have, once again, we mark the low, we target the high. The low does not have to be swept, right? Then we go higher. We have a higher low, we move higher, we target the high, boom, and we move lower. Where do we move lower to? Can you start seeing the pattern? The market moves towards the order block on the daily, and the market moves towards the fair value gap on the daily. And then it moves to the upside. And now notice, at this point, the high gets targeted. And now, I want you to notice something. Where is most of the volatility coming into? Is it on these moves to the upside? Are they very impulsive? Or is it on the moves to the downside? If you said moves to the downside, I want you to notice how the market barely moves to the downside. Or here, the market moves slowly to the downside. You have some impulsive moves, but most of the momentum is coming when the move is happening to the upside, meaning in line with structure. So imagine that you're trading with a current, right? A lot of traders, let's say this is the current, right? This is the river. The current is going this way, right? And we are right here. We are right here. We are going downstream, right? Ignore whatever this is. Okay? Do not overthink it. Okay? So we're going downstream and we're happy, but we need to get out of the river. And there's either a rock right here, or there is a bigger rock down here. A lot of traders, what they would do is that they would swim for some reason back towards this rock, this tiny, tiny rock, which basically is the reason I make it smaller is because it's to depict how much more force people try to achieve for this 1R trade, for example, than just waiting, and having a good risk-reward trade. Right? So now I want you to go back here and imagine a lot of traders, they would start trying to short this, not understanding that the most amount of money will be made once they wait for the market to set up, which is this candle right here, and then execute on this one, right? Look at how much quicker, more profit, and a better risk reward you would have if you would have just waited. So it's important for us to understand that most of your money will be done in line with market structure. And again, I will mention this again. There is going to be a video about internal market structure again, because there is the possibility of us taking advantage of these moves lower. There is. But I'm telling you that most amount of the money that you will make will be in trading in line with the trend. That's what I want you guys to do. I don't want you to constantly be fighting for these 1-hour trades that takes the whole day to play out, and finally news come out and boom, take profit is hit. Which is basically you trying to go upstream for this tiny rock. I want you to chill out, let the market move. Once it moves in line with your direction, you take advantage of it. That's the goal, right? So another thing, again, high or low, right here. We go for the high, we target the high. Then bullish PD array, bullish PD array. So again, remember, bullish PD arrays get disrespected. Bearish PD arrays get disrespected. So for example, let's think about a bearish PD array. This extreme order block. Was this extreme order block right here respected at all? No. We had a small reaction from it. You can see this, and I call this catalyst for pullbacks, but it gets broken through. While a big higher time frame PD array, these do not get disrespected, right? So bullish PD arrays get respected, bearish PD arrays get disrespected. That's the example right here. And then market moves to the upside, again, high or low. Is this low swept? Nope, the market continues to move higher, right? So then we continue with the higher low, because again, you want to see an actual pullback, a bigger pullback. Bigger pullback, you can either consider this to now be bearish, but I would recommend you still be carefully bearish here. This is where internal structure comes in. And then once you see the market moves, shifts, there you go. This is where you put in your mind, okay, we are going for the highs, right? So from here on, higher low, and then we have the move higher, sweeps the high, and then we start to have this bearish push. Again, internal structure would basically make you be able to short here and all of these days. But if we're just looking at external market structure and structure in general, I want you to remind yourself, highs get targeted, highs got targeted, highs got targeted, highs got targeted, highs got targeted. Lows don't have to be swept. How many times did you see these lows getting swept, right? Almost none. Only when the market actually shifted. And highs are going to be targeted. So the reason I say this is because I see a lot of people's forecast. Believe me, so many people send me their forecasts on Instagram, or they tell me to see something, or in Discord communities, whatever it is. Wherever I'm present, some people show me their analysis. And every time I see people's analysis, I see that they're always waiting for these equal lows to go before being bullish. Not understanding the overall direction of the market is bullish, right? So instead of trying to always wait for the sweep of the low that does not have to happen, just trade with the market structure and target the highs on a bullish market structure. Now let's see the bearish market structure. And by the way, notice how we go from this. Let's remove this. So we literally go from here, right, to here. Same price action. No joke, same price action. And you can check euro dollar on the daily. Same price action. Notice how we have the sweep, and then all of a sudden, what happens? Let's go here. Bearish PD array. Oh, sorry. Let's see. Oh, bearish PD array gets respected. What else? Let's go up. Again, moves lower. Bearish PD array gets respected. Then moves lower. Bearish PD array gets respected. Moves lower. Bearish PD array gets respected. Then as we move lower, bearish PD array gets respected. So can you see how the market structure shifts? And let me actually show you euro dollar, because all of a sudden, all of these old bullish PD arrays get disrespected, right? So, gets disrespected. Gets disrespected. Gets disrespected. Gets disrespected, right? But they only got disrespected once the structure shifted bearish, right? That's when all of these PD arrays got disrespected. And what were the ones that got respected? It was the bearish PD arrays. So, on a bearish trend, bearish PD arrays, let me get this. Bearish PD arrays get respected, which we saw. Bullish PD arrays get disrespected, which we saw. Highs do not have to be swept, which we saw. Doesn't get swept, doesn't get swept. This one actually got swept, but doesn't get swept. Doesn't get swept, doesn't get swept. And now, like, all of these lows were always targets. Target, 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 right? Target right there. So, lows are going to be targeted. Highs don't have to be swept. Bullish PD arrays are going to be disrespected. Bearish PD arrays are going to be respected. So here are two clear examples of market structure being either bullish or being bearish, and what it means for market structure to be bullish or bearish. And the reason why this is important is because this is going to show you when to be more aggressive, when to trade, when not to trade. And I'm going to show you right now when not to trade. But market structure is the foundation of price, because a lot of traders, what they do is that they see this first move. Let me stop this. They see this first move right here on euro dollar, right? They see this first move and they think, well, now it's impossible for me to execute on any long, on any shorts. When in reality, the bearish push, the bearish market structure has just started. So a lot of the move is still going to happen. But this is when you switch your mentality into, I am not going too long anymore. I am not going too long anymore. I will not long anything until the market shows me that we are bullish, right? From September until January, I have basically entered in one or two longs. And by the way, most of them were losses or tiny losses. I haven't taken a full loss in some time, but most of them have been tiny losses. All of my trades, 80 to 90% of my trades on euro dollar and on pound dollar over the last, this is 5 months? Over the last 120 days, which I guess is 4 months, have only been shorts. And all the way here, from here on out, they were mostly longs. Because I'm following market structure. I don't care what the market is doing besides that, right? If the market is pulling back, I am not going to execute. As long as the market is not in line, internal market structure and external market structure is not in line, the probability of a trade playing out is lower because you're trading against daily market structure. Now, let me quickly show you an example, because a lot of traders don't know what the market structure is. And if you don't know what the market structure is, you just don't trade. Because during market structure, when it's just range bound, nothing is respected and everything is disrespected. Yes, this is basically me saying the same thing twice. Nothing is respected and everything is disrespected. So this is what most people for some reason want to see bullish price action being. Right? Because so many people forecast something like, oh, before we move higher, we have to sweep the low. No, we don't. This, to me, is an immediate red flag. I stop trading if I see price action like this. And this is what we see that. This is when we see that. Normally, that is marked by a V-shaped reversal, like this. And you will start seeing bearish range-bound price action. This is the 4-hour chart, by the way. This is 2 weeks worth of price action. And now you might say, oh yeah, Kimmel, but we had to move towards these highs. Well, really, but what about the people that traded here and took a loss because the market did not reach the high? Right? What about the people that traded here and they took a loss because the market did not go higher? What about the people that traded short here and they took a loss because the market reached the high? I did not trade over these 2 weeks. It was like, the market isn't doing anything. I have no idea where the market is going. So if when I ask you the question, what is market structure? And your answer is, I don't know, you just don't trade. And you will notice that on the daily, most of the time, market structure is actually quite clear. By the way, this was the price action that I was showing you. Right here, this is the price action on that 4-hour chart. Let me tell you, I did not trade until we had this market shift. And then what did I do? What do you guys think I did after we had that market structure shift? I only entered in shorts afterwards. And obviously, we won. And we won very, very nicely. We were able to make great returns. But this is because I was able to wait when market structure is not good and be aggressive when market structure is in line. So I want you to keep in mind, market structure, it's always been in front of us, right? This is the purest form of bullish market structure. This is the purest form of bearish market structure. And these are very important things to always keep in mind when you are seeing certain market structure. If we're seeing bullish market structure, expect bullish PD arrays, which means bullish fair value gaps, bullish order blocks to be respected. Bearish PD arrays such as bearish order blocks, bearish fair value gaps, bearish extreme order blocks, and highs to be disrespected. Lows do not have to be swept, and highs are going to be targeted. Right? This is what we saw here. Again, you can go to the beginning of this video again. Then on a bearish market structure, this is a picture-perfect bearish market structure. And we've seen that happening here. You cannot tell me that this is not picture-perfect market structure. You can't. I'm sorry. This is beautiful. Beautiful market structure. And on clean bearish market structure, bearish PD arrays get respected. Bullish PD arrays get disrespected. So again, bearish order blocks, bearish fair value gaps, they're going to be respected as I showed you right here. Bullish PD arrays are going to get disrespected. So notice how we have one bullish PD array getting disrespected, but then immediately the next one gets disrespected and gets used to then move the market lower. Highs don't have to be swept, meaning you did not see any highs getting swept. No highs were swept here. And lows are going to be targeted. Again, low is the target, 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 and now we're starting to see the possibility of the market moving back higher because we are starting to have a market structure shift. Right? So we are going to be talking about market structure shifts as time goes by. First, I want to talk about market structure as we have right now. Then we are going to talk about internal and external market structure, make it a little bit clearer on what order flow is, everything. And during that lesson, we're also going to be talking about market structure shifts. What marks a market shift? That's what is going to be important. So stick around, check the next video tomorrow, or if you're watching this a little bit after, then make sure to check the whole playlist of the trading bootcamp and understand you want to trade with market structure. That's how you are going to be profitable. Understand market structure. This is mostly going to be seen on the daily, right? This type of market structure is mostly seen on the daily. And you will be much more likely to become profitable. So with that being said, I will see you tomorrow, where we are going to talk about internal and external market structure. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.